You're listening to certified financial planner Doug Goldstein, host of the Goldstein on Gelt show, www.goldsteinongelt.com.
Okay, I'm very excited to have on the Goldstein on Gelt show Jessica Moorhouse, who is the award-winning personal finance blogger and podcaster at Mo Money Podcast. Jessica, real pleasure to have you.
Thanks for having me.
So apart from having this cool name, not your name, but your podcast name.
Yeah, it's like Moorhouse isn't cool.
I know you speak to a different generation, quite frankly, from what I think I normally speak to. I normally kind of talk to like older people about retirement, but I think you speak to younger people. But I think you also speak a lot about retirement.
I do.
What's the difference?
I do definitely talk to millennials because that is the perspective I'm coming from. I'm a millennial. And when I started learning about personal finance, I was from this perspective of, okay, well, lots of the stuff that I'm reading in books doesn't apply to me because things have changed a lot since I, graduated university. That was during the recession. So lots of the kind of rules I was taught growing up on how to, deal with money, how to have a successful career, they kind of went out the window. And so I started my blog and then my podcast to educate people on what they should know from a millennial's perspective.
Got it.
Which I think is fairly important. And also I wanted to, be able to talk to, people in a understandable, digestible way, not intimidating. I think a lot of people, especially, people that I talk on the day-to-day, they feel very intimidated by personal finance because they think it's overcomplicated. They think you need an MBA to really understand how to invest. And I want to kind of show them that that is not the case at all.
Is there something fundamentally different in the way that millennials should look at money or just the way that they do look at money?
I think just money for millennials is just across the board very different. I looked at kind of my parents who are the boomer generation, and they have a very different idea of money. Whereas me being a millennial, it's none of those rules. They didn't really apply to me. For instance, lots of millennials, they graduate university expecting a great job with a good paying salary. And what they realize is like, oh, lots of those jobs are really hard to find. You're going to be starting at the bottom, making a very low base salary. And also, oh, hey, surprise, you have $40,000 of student loan debt to deal with.
Ouch.
Something that I think a lot of older generations didn't experience. So we have to kind of come up with different ideas and like, what do I do? Well, you have to kind of really live frugally for lots of those years. You might need more than one job. And that's very common among people that are in the Gen Y generation. Is you need to have a side hustle, as we like to call it. So almost everyone I know, yeah.
But are they really surprised? In other words, a lot of times people say, and then I was surprised I couldn't find a job. I mean, frankly, we've been talking about this for years. Our kids from high school, no one's telling them. It's like a big secret, and then they end up leaving college in debt and with no jobs?
I think so. Well, I think a lot of what I was taught, especially when I was younger, is, you'll have a tough time finding a job if you don't get your degree. So if you just expect to get a good job out of high school, good luck. But if you go to university and you get your degree, it'll be way easier. Well, everyone was told that. So everyone went to university and got degrees. So now we're all in the same boat trying to fight for these entry-level jobs with these like bachelor's and master degrees.
So is there anything really to talk to millennials about investing, or is it all just about how to get out of debt and how to keep a good budget?
Oh, no, definitely not. Like I think investing is so important, especially because I think of millennials, they focus a lot on, paying down their student loans, saving up for their first house, saving up any kind of money so they can, have a decent life. Only then do they kind of like, hey, what's that investing thing? And sometimes they never kind of get to that point. So that's definitely something that I'm hoping to educate more millennials about, because the sooner you start to invest, the better you'll be off. And that's why, I do kind of talk about retirement and early retirement on my show and on my blog, because I think it's an idea that lots of millennials, they think of retirement as if, oh, well, I'll be 70 and I'll just, I don't know, I'll figure it out then or whatever. Because we also look to our parents who are kind of in that age range where they're starting to retire. And I guess like for me, I'm looking, I'm like, I want to make sure that I'm not worried about having enough money. And I think a lot of us are looking at our parents and we're like, oh my gosh, I want to make sure I'm way more prepared than my parents were.
Yeah. We're talking with Jessica Moorhouse, who is the award-winning finance blogger and podcaster at Mo Money Podcast. She's been talking to us a little bit about the difference between millennials and, well, I guess I could say my generation or my parents' generation. One of the issues that you started to raise before, and I really want to dig into this, is people who are young and are really buried in a lot of debt, like student debt and maybe even buying a house, they have negative equity. They don't even have money. Mm-hmm. So when they get money, is it better for them to try and dig themselves out of debt by paying off these loans? Or should they say, I'm going to take some of this money and actually invest it in stocks, bonds, or mutual funds?
I think it's always both. I think it's very important to attack your debt head on and have a plan, have a due date for when it's going to be paid off, and really aggressively try to get that number to zero. But I think you can't just focus all your energy into debt reduction. I always tell people you need to also save and start investing, even if it's, just a little bit of money. And that's a big misconception, I think, especially with my generation. They think that you already have to have a lot of money to begin investing, which isn't the case. You can, invest in stocks, bonds, index funds, whatever, with not that ton, not a lot of money. And it's very easy to do it, especially now. There's so many different robo-advisors out there. You can start, investing within minutes online.
Mm-hmm. But does it make sense to you that someone is, you start investing and the odds of being able to earn more on your investments than the interest rate on your debt? I mean, we're not even talking about consumer debt that a lot of people have as well. I mean, the odds are next to none that someone could do that over a long term. So on paper, I hear what you're saying, that getting the mindset of being a saver is important, but just on paper, does it make sense to be investing, or should you try to get a clean slate as far as debt before you start putting money into long-term investing?
Well, you kind of mentioned, what I was trying to kind of get to is really creating those smart money habits. So it's great if you become very good at paying down your debt. That's awesome. And there's so many blogs out there just dedicated to be like, look, I'm crushing my debt. And then there's the point where they're debt free. And then they're like, now what? Wouldn't it be great if you already had a plan and set, you already had a thing you were doing, which was like investing on a continual basis, that you can just, now I can just dump that money into that investment, or I can start saving for these other financial goals. I think it's really important to do both at the same time. It may obviously take you longer to pay down your debt, but creating those really smart financial habits is so important.
Yeah, I agree that that's critical. What I find in my day job, I'm a financial advisor, and so I have the good opportunity to work with people who built wealth over the years. Mm-hmm. At the same time, I work with people who inherited it. And the people who built the wealth over the years just do much better, because the reason they built it is because they had good habits. And quite frankly, it's not uncommon for someone who inherits a lot of money to literally blow it within a couple of years, because he doesn't have the good habits. He doesn't even know. He doesn't think like a wealthy person or like someone who built wealth. He just thinks like someone who, hey, look, I got a lot of money. Where can I spend it now?
Exactly. I think that's kind of the key thing that I like to kind of drive home to my audience is, it's really not about how much money you have. It's what you do with it. And, creating those habits as soon as you can. I mean, I started educating myself about personal finance at 24. And now that I know so much, I'm like, man, I really wish I put those things into practice as soon as I got a job at 16, because I wonder how much money I would have accumulated, what my net worth would be now if I had done that earlier.
All right, in the last minute, tell me, how can people deal with the fear, and it's a legitimate fear, that the market's going to crash? So here you are being a cheerleader for investing, and people say, well, wait a second, the market's been going up and up. It's due for a crash. Mm-hmm. Do you really think I should put my money in now?
Yeah. I think still there's no time better than the present to start investing, but the key is to be diversified. Don't just dump all your money in stocks. I mean, you really, need to be prepared because, these things happen. That's what happens in the economy. There's crashes. Things go up and down. You need to be diversified to be prepared for that. So I'm a big, cheerleader for index funds, and also just buying when things are low and selling when things are high, and not doing the reverse. I think a lot of people they look at the markets and they freak out, and then they do the opposite. They, not what you're supposed to do. They start selling when everyone else is selling, and then that's when bad things happen.
All right, we're talking about Jessica Moorhouse, who espouses the buy low, sell high philosophy of investing, which is, of course, correct. It's just difficult to do, as you're pointing out.
Yes, it is.
Just in the last few seconds, just tell me, how can people follow you and follow your work?
Absolutely. You can find me at jessicamoorhouse.com. And, of course, you can follow me on my own podcast, the Mo Money Podcast, on iTunes, SoundCloud, and YouTube. Okay, we will put links to that at the show notes at goldsteinongelt.com. Jessica Moorhouse, thanks so much. Thank you.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.